Hey, Joe, good afternoon.
Hi, Mike.
How are you?
I'm good. How are you?
Good. So,
Happy February.
Happy February.
It's hard to believe we're already in February.
That reminds me, wasn't today Groundhog's Day?
Today was Groundhog's Day.
And I heard that he did not see his shadow.
Which means?
Which would suggest an early spring.
I love it.
So for us.
I know you don't. We've talked about this
I know, but I'm actually, you know what? There's something, I'm okay with the cold. It's really more about the sunshine.
Right.
But welcome everybody to the our second edition of the Mortgage Update with Mike and Joe. Obviously, usually Joe and I start off by having a little banter regarding the Bills, but we're going to, obviously their season is done, but the Super Bowl's coming up. And I don't know about you, Joe, but I'm getting requests for a lot of Super Bowl squares and all that type of stuff. What's
that time of year?
Yeah. What's your Super Bowl tradition look like?
Just watch the game at home.
Yeah.
I don't know if I'm going to even watch. No Bills. It's a little disappointing. Tired of the Chiefs. I'll be rooting for the 49ers.
I know. Well, I'll be rooting for them too. You have to watch the halftime show.
Right.
Well, shifting gears to mortgage and real estate. A couple things that we wanted just to share with everybody is one, Joe, maybe you could give everybody just a quick update for those that couldn't attend the MBA forecast lunch that you guys had. Kind of what the highlights of that were and kind of where they can find it.
Yeah, so every year, this was an ongoing program for a long time. The MBA in partnership with the Rochester Home Builders Association, GRAR, and Women's Council Realtors put on a economic forum and forecast. And when COVID came, it kind of went away. We picked it up again last year, and last year we actually started the event planned at Oak Hill. And then based on the attendance, we had to quickly change venues because we outsold Oak Hill and moved it over to the DoubleTree and ended up with about 350 attendees. This year, we started at DoubleTree because of the success we had from it last year and ended up with about 375 people in the room.
That's awesome.
And these were realtors, builders, attorneys. We had some elected officials there, representatives of towns, and really, we had a couple of initiatives we were trying to launch. One, we had a speaker from the National MBA come in, and they gave a rundown on mortgage rates and what's been going on in the economy, and really talked about everything related to mortgage. And Jim did a small presentation on what we saw in 2023 from a real estate perspective, what we're expecting to see in 2024, and then we culminated with a fireside chat with some key figures in the Rochester community. So we had Bob Duffy from the Greater Rochester Chamber, Matt Hurlbutt from the Greater Rochester Enterprise, Jim Barbado, the owner of Pridemark Homes, and Jim Yockel himself. And, we really wanted to bring to light this housing initiative that we've been working on as a group, trying to find creative ways to reimagine how housing comes to light. Right. A lot of the strategies and the common problems that we're seeing, trying to find solutions that could potentially create more inventory and solve what's called this inventory kind of glut that we're in right now, where you have locked up inventory because you have the older homeowners that would love to downsize but don't want to pay more for a downsized house than what they currently have. Right. And that's locking up that level of inventory. And then you have the inventory that I got a mortgage in 2020 and my rate's 3%, so I don't want to sell. And that's locked up some inventory. So we've been in a shortfall from a new construction perspective for quite some time. So continuing to just try and find creative ways to incent builders to build more, make it a little easier, right? A lot of times builders come up against, approvals and getting the towns to approve what the project they're trying to do. So it was very insightful. There actually are recordings of the presentation. All three are broken out. So if you wanted to just watch one or you wanted to watch all three, they're on the Rochester Mortgage Bankers Association website.
That's great.
And so somebody can go in if they weren't able to attend and watch them. It is, when I started the event off, I said we brought this event back in the spirit of collaboration because even after you've been in the industry a little longer than I have, but even after 20 years in this industry, it's amazing every day to see the collaboration that exists amongst different parties to make a transaction happen.
Yeah.
And when a group focuses on something and works together, you can make a huge impact.
Yeah. I think this is something that, on this podcast that you and I are doing, I think keeping that messaging alive, particularly in regards to as we begin to make some progress in making some steps towards trying to address the inventory issues that are impacting all of us, and doing kind of our part just to continue to keep that alive.
Absolutely.
So, all right. Well, listen, before we talk about the what's going on in the market with rates and so forth, just wanted to remind everyone that GRB, that we're going to host our second Survive and Thrive event. It's going to be held on February 15th at Monroe Golf Club. We're excited about this. Really, the purpose of this, Joe, as you know, is to really have a conversation with other agents that are, very much at the top of their game, where they can come and kind of share what they're doing differently in 2024 compared to what they did last year, knowing that it's still a very tight environment that we're in, and they're going to be very forthright. We have an appraiser that will be there as well, that will be kind of talking about what's going on in regards to comps and pending sales. Obviously you being there as well, kind of give an update on all the different products and programs that are out there, the marketplace. Jim Yackel will be there as well. So we got I think a really good group. So there's limited space. So if you're interested, we encourage you guys to sign up, and we're looking forward to it.
Yeah. And I mean, this is our second annual Survive and Thrive, right? And we did it last year, and it was well attended. And even if you come to this event with the intention of just networking, right? You may pull a good tidbit out of it. I know there were some good strategies that came out of last year's event, that people still talk about today. So I think that, if you have the time and you're free, February 15th, it's the day after Valentine's Day. Right. Valentine's Day is out of the way. It was a good event, and we have some great speakers lined up. So excited for that.
Yep. And we will feed you as well. So,
absolutely.
All right, Joe, so let's talk about the market. So obviously we're only 1 month in, but maybe if you could just kind of share with everybody kind of how the month shook out for us, and what did the stats look like?
Yeah, so it's interesting that we're hearing and feeling a lot of what we heard and felt last January. Very low inventory, multiple offers, high escalations, over ask, and we're seeing that in the market in January. For Monroe County, surprisingly, for the stories that I heard, it was only 9.46% average over ask in Monroe. You factor in Monroe and surrounding, about 7.63, still high, right? Almost 10% over ask. 14617 zip code was our hottest zip code of the month. We did 6 transactions in that zip code at an average of 23% over ask.
Really?
Right. So normally we look at that and say, if we did one transaction and our highest over ask was almost 39%, but there was only one transaction there, right? So it's not a real story of what's happening in that zip code if it's one house, but when there's 6 and you're that high over, right? So that's a big tell of what's going on in a particular area. And then in Onondaga County, 7.01%. That's the highest they've been in a little while.
Really?
They operated pretty flat last year. And again, through conversations with some of the agents out there, same idea, right? Very low inventory. Nobody's wanting to sell. They got buyers. And I mean, we do have a lot of buyers right now. We have a lot of buyers looking to buy. I keep talking to agents and they say, we have listings coming. So if you're a buyer out there and you're looking, don't get frustrated. There's more houses coming, right? This is just the start of the year. Usually this is a slower time for inventory. And in Onondaga County, actually the highest over ask was 31%. Again, only one house, but it does tell you that. Interestingly enough, looking at our application mix for the month, we actually did 32 government transactions in the month of January.
That's a significant increase.
A very significant increase. I mean, we've been historically running about, anywhere from 8 to 12% government business, and that represented a 26% share of our applications for the month.
And Joe, I think that's a really good stat to share when we have this event, but also to talk about how those offers got accepted. Obviously, these transactions are going to close. Obviously, part of the appraisal, discussion will be that don't shy away from an FHA offer and kind of giving people insight on how to get those offers accepted.
Yep.
That's great.
So the market beats on. Right?
Okay,
we'll
the market
see
beats on.
where we go here. This is the first month, and we'll be pushing out that shareable data to our
Okay.
fans of that data soon.
That's great. So let's shift gears to mortgage rates. So today was some economic news came out today regarding jobs, and I think that report came in a little stronger. Right?
Yeah, it was a very big miss on the jobs report. Right?
Yeah,
I think they were estimating 185, and it came in at 330.
Yeah, something in that range. So what impact did that have on rates?
So we saw the 10-year. So the 10-year after the Fed spoke, the 10-year Treasury was kind of dipping down into the 3/8. Right, we saw that earlier this week, and it's been historically it's been in the 4.25 range. And this morning it opened up at 4 again.
Okay.
So, any of this economic data that we keep getting, that the stronger that it reports back, the more or less likely it becomes that the Fed will cut rates, because their fear is if we cut too soon, it's going to drive inflation back up.
Right.
If we cut too late, it's going to stagnate the economy. So they're really kind of in a catch-22 right now, and it has to be precise as to how they do it. And a lot of times when we see news like this comes out, we get that knee-jerk reaction, and then it kind of settles.
Right.
We did get above 4, and it came back down just around 4. I don't know where it is this afternoon, but where that comes into play, and actually Joel Kahn, the national MBA economist, did a great job of this, explaining what the spread means in all of this. So mortgage rates are typically based on the 10-year Treasury. Right. They ebb and flow. When people hear the Fed is cutting or raising rates, typically it's the impact of what that has on the 10-year Treasury note that drives the rate up or down.
Right.
And historically, the spread between the 10-year Treasury and mortgage rates has been about 184 basis points, and that spread is essentially what the banks make. Right. They're making that money on that spread, and for the last year, it's been up at the 284 basis points. So 100 basis points higher, which is why we've seen, if you think about that 10-year Treasury being at 4, that means we should be at a 5.875 rate, essentially. But we're at a 6.875 rate because that spread right now has been running 100 basis points higher. And that's been the driving factor with the mortgage rates. And part of that is banks looking at it saying, well, this loan's going to prepay. So I'm going to keep the rate a little bit higher because of that prepayment penalty, because long term, the bank is making their money on that loan on interest. Yeah. And then the Fed has kind of tapered off, their buying of the mortgage-backed securities, which has brought the demand down, which has meant that the spreads or the yields has to be higher for people to want to buy the securities. Right. So that Joel actually did a very good job of explaining that, and it was very insightful to see and just to hear. We felt that number, right? We felt that spread being high, but just to hear it and see it broken down was really eye-opening.
Yeah. Joe, I think that's a great segue for us to, for us to remind everybody that, as obviously last year when rates really started to move up, GRB, we launched our rate relief program, which was really designed with the expectation that rates did go up so much, so fast, that at some point rates would come back down within the next 1 to 2 years. So when those rates do drop, they would benefit from refinancing with us because we pay a good chunk of the cost with that. And then we rolled out Rate Relief Plus, which has been a real big win for us. And Joe, maybe you could kind of just reinforce what Rate Relief Plus is, kind of how it works, an example, and we've actually done quite a few of them as well.
Yeah. So the Rate Relief Plus, what that is it's a lender-funded temporary buy down. So if a borrower takes out a mortgage at 6.5% today on a 30-year fixed, we would fund the difference of what their payment is based on a 5.5% rate. So if their payment at 6.5% was $1,000 and their payment at 5.5% was $900, those are just round numbers.
Sure.
We would take that $100 times 12, it would be $1,200, and we would basically fund that into an escrow account. So for the first year of their mortgage, they're making their payment at $900, and we're adding that $100 each month to their payment for the first year and making their payment whole, and they're able to then have a lower payment for that first year. And those numbers, 900 and 1,000, are low, but if you're doing a bigger loan size, that could be $3,000, $4,000, $5,000 over the course of a year less that you would have to pay when you're making that mortgage payment. So it really helps to, and we see this used right now because, hey, we expect rates to come down, right? So yeah, why not take a lower payment for the first year, and then worst case scenario, if rates don't come back down, you're just at whatever rate you would have had today. Worst and best case scenario, rates come down, you're able to refinance. And if there is any balance left in that escrow account, it just gets applied to the principal balance when they refinance. So it's a great way to take advantage of a lower payment. And if you have a house still to sell, maybe you have a family member that's out of work for a little while, you're planning on having a child, and one of the parents is going to be out of work for a short period of time, it gives you that little bit of relief on your payment to ease into maybe that back into that payment. So it's a great program.
So we've got that. We will continue to offer that program through the end of March. So make sure that you reach out to us so that we can kind of help you and your clients take advantage of that. So last thing, Joe, I just wanted to talk about was really we want to engage the folks that listen in. We want to make certain that as we go through this year that we're, getting questions regarding things that are important for them to learn more about. I know last month you and I talked a lot about all the different grant programs that are out there, and there's numerous, programs, and trying to ensure that people, first of all, know that to become aware of them, how to use them, because it can really make such a significant difference to a buyer that is looking to get into home, but might not have the funds to do so. So, so we want to make sure that the folks certainly share with us what you want to learn more about, and we're really looking forward to having a great season, if you will. Anything you'd like to close with, Joe?
Yeah, I think you touched on it, but our most influential tool, right? We've talked about these GRB power tools,
right?
Our mortgage originators. GRB's mortgage originators are very knowledgeable on the grants, on all of the programs that we have. They're kind of your first line of information, right? So if you do have any questions, you want to learn more about our products, you want to get in contact with one of our loan officers because you don't have a relationship with us, reach out. We'll get you in contact with one. Or if you do have a loan officer that you normally work with and you want to just hear more about what we got going on, we've rolled out a lot of products over the last few months, really. So really getting in touch and understanding what we have to offer and how we can help your clients win offers. Okay,
that sounds good. All right, well, listen, thank you, everybody, for listening in, and we wish everybody a happy Groundhog Day and a great weekend. See ya.